not delayed.
Mm.
Yay!
It's going to happen.
Happy Friday. Do you think we're live right now?
I think so, but...
I'm going to try to find it so we can share it out, guys. This is a big day.
Oh, we're good.
Yay!
There's no delay. All right.
Happy Friday, everybody. Sorry we've been having some technical difficulties.
Oh, there it is.
There it is, glitching again. Man, that's going to be distracting.
Mm-hmm.
If you can just not watch and listen, is the audio okay? Here, I've got it live right here.
So we can share it out.
The audio sounds all right. So as long as we don't watch and they don't watch.
It must be just our internet here right now. It's
Broadcast
just
interrupted. Must be good old Comcast.
Mm-hmm.
We'll just do it, and if they can't hear it or if they comment, I'm going to go ahead and share it out. Share it out. All right, well, if you've never seen this show before, this is Finance Friday. This is the show where we give you information.
I do not like this at all.
I know, it's very distracting. The information you need to help you grow and protect your wealth. And I am Amy Novakovich, and this is Ryan Wilson.
Hi, everyone.
And we are with Nova Wealth Management. Go ahead and check out our page. We have a lot of awesome stuff here. We also have Twitter. Go to our website, novawealthmanagement.com. You can see all our YouTube videos, our Instagram videos, and share this video out because this is the number one question we have gotten this week regarding inflation, the national debt. I can probably lower this, huh?
Yeah, you always do that, though, so I'm just used to it now. I just tune it out.
Sorry. The national debt, where the market is, coronavirus is gold.
Yeah.
Gold is hitting very, very high prices in the 1946, I think, this morning.
It touched 2,000, I think, today.
It did. No, I think that
or
was
maybe
yesterday.
a couple days ago, yeah.
Intraday yesterday. So, should you buy gold? This is the number one question we get. So we're going to talk today about should you buy gold? Who should buy gold, really? Because these are not recommendations. This show is informational. We don't know you, so we can't make a recommendation. But we'll talk about who it might fit in for and give you enough information to inquire, either by calling your advisor or calling us, whatever. And then we'll talk about how, the different ways that you can buy gold. So, do you want to talk a little bit about who would buy gold? Somebody that's concerned about...
Yeah, I think,
Go from there.
If you have a diversified portfolio, is it good to have gold? Maybe, sure. Again, we can't. We're not recommending here, but I mean, I think that
not to be so generic.
If you're going to have a diversified portfolio, having maybe some precious metals in there isn't a bad idea.
Precious metals meaning like gold.
Yeah, gold,
silver.
platinum, silver.
Yes.
There's a list.
Yes.
But yeah, so having those in your portfolio is maybe a good idea. I think that generally people that, you have the doomsday preppers that like to buy gold.
There will always be the doomsday. Like the market's going to crash. You should put all your assets in gold. And I think that's more, like when I said I wanted to do this topic, that's more what I wanted to address because those are the phone calls that we're hearing. We just had a client yesterday want to move her entire account. And not that it was like an astronomical multi-millions amount of money, but it was $500,000
that's
into gold.
That's a lot of it in gold. Into one, you got to think about it's one position. You're buying a commodity.
Doesn't pay interest. Doesn't pay a dividend. Yep. So you're not going to get an income while you wait. In fact, gold from August 1st of 2011 until almost right about August 1st this year was it went down and then came back up.
Yeah, it was like a little U shape.
But if you held it for the last 9 years is the point. If you would have bought it in 2011 and today, if you were to own it today, you would barely be up. So that's 9 years. Now, you could obviously make the same argument for some stocks. Yeah. But that is exactly our point. Gold is not exempt from risk. So when you say, well, yeah, Amy, some stocks like that, or, the NASDAQ was like that for a while, well, yeah, but they're higher risk.
Yeah, that's what you'd expect from
That's what you would
stocks.
expect.
But a lot of people I think that's the common misconception is that gold is safe, right? And I think that while it is in some ways it's a physical item that you can hold.
Well, it doesn't have like a human CEO.
Right. There's no one running it.
There's nobody running it. There's no balance sheet to mess up. So in that respect, I suppose it is less risky. But as far as the fluctuation and the volatility,
especially in the short term,
you could lose a ton of money in gold. You could hold it and in a year lose 30%. Like that is, that has happened many times. It's not exempt from risk by any means.
With that said, I think that now's, everything that's kind of happening points to gold being a little bit more of like I don't know if safe haven is the right word, but whenever there's uncertainty, gold tends to be kind of a safe place that people go because, with the election coming up, people are like, oh, whatever's going to happen. Well, gold seems to be a safe place. Like you can, in the long run, in the past, people used gold as currency. So, it's kind of that play of like, instead of paper currency that we have that people are like, what is it even worth? Because it's just printed.
Right.
Now gold can actually be a physical thing that you can have. And so it tends to be a little bit safer when there's uncertainty, whether it be within the country, global uncertainty. Gold tends to be the place where people go. And especially with lower interest rates that we're having right now, people are like, well, where is a safer place to go? And so people are kind of finding refuge, so to speak, in gold.
Well, people like that you can physically hold it.
Right.
So just like real estate, it's called a real asset. So with real estate, you can stand in it. You can hold it. Not hold it. You can touch it.
Not a house, yeah. You can drive them down the road now, though, apparently. I mean, have you seen the videos of, like, three-story houses that are on the back of these, like, semi-trucks?
Or have you seen the mini houses that they build now?
Cool
the
too.
teeny tiny houses? I want one. Clutter gone. Anyway, so gold is something that is different from a stock because it's not just on paper.
Right.
However, it does have its downfalls as well because it does have, if you buy the physical gold, so I guess we can kind of transition now into how you buy it. So there's several ways into how you buy gold, and one of them is, yes, you can physically buy the gold bars. Right? And you can either store them yourself in a safe. You can store them at a facility, which they will charge you. There is a storage fee to do that. And there is a transportation fee. So there is fees involved with owning that. The downfall is you can't just, like with a stock, I can go on the computer, not right now because the market's closed, but before 4 o'clock, I can go on the computer and be like, I'm out of my stock. Like literally half a second, done. If you have physical gold, you cannot.
Yeah. But gold is a pretty liquid asset. I mean, you can go, there's a lot of places that will buy gold. Obviously, it's at the market.
Yes, but it's a process. You're not just going to be able to log into some computer account and hit sell, is my point.
But as far as like a physical asset goes, like you were talking about a house and things like that, I mean, you're not necessarily stuck with gold. You might have to wait till tomorrow. But yes, I mean, you can't sell it from your, I mean, maybe you can sell it from, Facebook marketplace or something. I don't know. But yes, Facebook, it's not as quick and liquid as selling, Apple. And you're like, I don't want Apple anymore. Get me out of there.
Right. So what they developed was a way to trade gold. So instead of owning, man, that coffee smells really good, and you just spilled it everywhere. It's like an air freshener. I built an air freshener.
It does smell good.
Instead of just owning the physical gold, you actually can have an investment that trades with the price of gold. So if gold goes up, you go up. If gold goes down, you go down. But if you want to get out, you can trade out right away. So it's called an ETF, or an exchange traded fund. There's different ticker symbols. That's how you identify a certain investment, just like a stock has a ticker symbol. This has a ticker symbol, and it's the main one that I know of is GLD. There's others. There's like GLDM.
Yeah, that's like mini
which
shares.
Is the mini. Yeah. So there are different investments that you can buy that trade like a stock. They don't buy you gold. So when you buy the GLD, you do not now have a piece of paper that says you own gold. What you have is a piece of paper saying you own shares of an investment that represent the price of gold. Right? I hope that makes sense. But you essentially get the benefit and the negative of the cons of having gold.
And most doomsday people, I would say, bringing it back to that, wouldn't necessarily do that. They're going to want to buy the physical. No, they want you to buy the physical gold. Because if they think everything's going to fall apart, then they're still investing in the market, in the exchange. And if you don't, you're not actually holding something. So people aren't going to do that. But it is a way of doing it, and it's perfectly safe.
Well, and because the doomsday people feel like
they don't trust
the dollar's
anybody.
going to go away.
Yeah,
and
right.
gold's all we're going to have left.
Right.
So you
And
better
if
have
you
some
dollar,
physically.
Yeah, if you have a dollar amount of gold,
Right.
then it's like, well, what is that actually going to get you? So anyway,
Right.
that's just another way to invest in gold, though. Which I think is kind of cool, and it's newer to. I think how the subscription model of like the world that we're kind of moving into is you can kind of have money every month go to like a subscription of gold, and then after like 6 months or however much you're putting away, they'll actually send you like bullion, which I think is pretty cool. And so if you need help like setting, a lot of people have trouble making themselves invest, and if I'm not saying put all of your savings or investing into that, but if you want a recurring and then every 6 months or 2 months, depending on how much you're putting into it, they'll send you a bullion or a little coin or a little bar of gold, which I think is a pretty cool way of kind of investing.
I do. It's kind of the middle of the road.
Yeah.
You're not, in a storage facility buying up thousands of bars of gold.
Well, and I mean, an ounce of gold,
to store it.
an ounce of gold being $2,000 right now, it's not like everybody can go out and just, do that. So I think it's kind of a cool way of just like automizing your saving, and I think it's kind of cool.
Yeah. And like Ryan said in the beginning, like to have a little bit of gold is responsible because it doesn't move like the stock market in the same direction necessarily at the same time. It doesn't correlate. So they won't all be going up at the same time, and they won't all be tanking at the same time. So you're going to have different things that move at different times. So it kind of holds up your overall assets. So it's a good, responsible thing.
We're not bouncy anymore.
We are?
I just realized it. We've caught up. I just did my ninja.
Oh, that's true. I
Sorry,
see
I
that.
just all of a sudden realized it.
I was getting used to it.
Yeah, me too.
But also, if you're worried about inflation, gold typically, now history does not always predict future performance. That's our nice little disclosure right there. But typically gold goes up with inflation, just like they always say, real estate goes up with inflation, things like that. So gold is something that you would want to own. Again, not all of your assets. Never would we say that, because that would be just one thing. That would be risky in and of itself, just to own one thing. So if you are worried about inflation, and we have obviously different podcasts and Finance Fridays all about the national debt. So and maybe we should do another one. It's probably time to get updated. We haven't done a national debt one since coronavirus.
Yeah.
And I have all these new fun charts.
Oh, I can't wait to see them.
We should do that.
Yeah.
But so anyway, so if the national debt is concerning, then we talk about printing money and paper, the dollar being worth nothing and coins going away, and then gold might have a little bit more value. So that is something that we up the position in your overall portfolio a little bit. So just to recap, because we're already at 13 minutes, should we just kind of review real quick?
Yeah, recap.
So gold is a position that we feel is very responsible to have in your overall portfolio. What's a responsible position? Kind of depends on the risk of the investor, but in general, I'd probably like to see, you know what, it's hard to even give it a percentage.
I think it's based on the investor, but I think having a section of
I'll say this, not like all your money and not even half your money in gold. I'll say that. Anything less than half, you're going to have to kind of determine yourself. Yeah, that's
going to be based on you.
Yeah, based on you. There's some people that I think 2% is responsible.
Somewhere between 0 and 50%. Or 1% and 50%.
Well, call us to talk about it.
Yeah.
Fine. If you feel like you don't know, then call us to talk about it. But yeah, in your 401k, should you be loading up on gold? No, I really don't think so. No, your 401ks are long-term money, and you are systematically investing every paycheck. So, and then different ways that you buy it. You can buy the physical bars. You can do, like Ryan said, do a subscription and they'll send you coins or bullion. And then you can also do the ETF, which is the GLD. That's the biggest one. That's the main one. There's other ones. And there's also mutual funds that are precious metals. And this might be starting to get over some people's heads. But the point is that there's different ways that you can own it that you don't have to physically hold it, and you can trade in and out of it pretty quickly.
Yeah.
So.
And I think generally gold, you want to hold. It's a longer term hold. You don't want to generally hold it short.
Well, I mean, like I just said, if you would have held it for 9 years, it wouldn't have went anywhere.
But if you would have held it for 10, it'd be up 50%.
Well, that's
so,
true.
And so it has these moves. I mean, and I think I can't remember what I think the last 5 years.
50% over 10 years.
Yeah, so 5% a year.
Fabulous
return.
I
think it's up. since 2000 though, it's up like 600%. So
Right.
I mean,
Right. Yes.
long
More
term,
than that,
yeah, like six something. But yeah, so holding it at longer term. But I think kind of the situation we're in, that's why people are asking, because it's setting up for maybe a move that gold makes more sense than it has in the last 10 years or so, 9 years or
But
so.
it's also like, do you want to buy everything when it's at an all-time high? I mean, yes, it could go higher.
No, I don't, I
But
don't think it's something that you
it's
maybe not.
very, very, very high.
Right.
So is it the type of thing that you wait for it to pull back a little bit, or is it
Maybe.
the type of thing,
Or maybe put a little bit, maybe
just a little bit at a time? I think would be responsible. I don't
'cause,
think buying
we
it.
say all the time, timing it is not, it's hard to do. So if you
Very
start
hard.
getting in and then it goes down a little bit and you keep buying some more, then that might be better than just saying, oh, I'm going to get in at this level. And then if it goes down 5-10%, then yeah, you lose, that's a bigger loss. Right. So, I think systematically trying to do that makes
It's a
probably
smarter way to
more
go.
sense. Yeah.
You'll be more successful that way. All right, guys, if you have any questions, you know where to find us. You can comment down below. Again, share this out and reach out to us if you have any comments, questions. Let us know.
For sure.
Thanks, guys.
Have a
Thanks,
great
guys.
weekend.
Happy Friday.